Good afternoon, Nick Morgan here from Opportunity Private Capital. It gives me great pleasure to invite one of our investors, Dave, in for our investor Snapchat today. Dave, good to see you.
You too, Nick. It's been a while.
Yeah,
thanks for having me.
I think it's been a couple of years since we saw each other.
Quite possibly. Not helped by lockdown for the past year.
No, but we'll go into that later. Dave, thanks for joining us. You know, what I know about you and what I've seen of you, you've obviously veered into the entrepreneurial space in the last few years. When we met, you were in big corporate, big director positions in corporate entities. You understand the machinations of big business and investing, and I'd like to think that I'm going to enjoy this because I think your insights are going to be quite valuable. You're from Ireland, yeah. So you have an obvious link to Europe. You have an obvious link to probably investment opportunities in Europe, more so than local people. I think you've still got a lot of family over in Ireland. So what makes you still gravitate towards investing in SA? Or have you veered away from that slightly, or are you tending more towards European markets?
I think it's good to have a view of both, actually. We obviously deal with a lot of uncertainty on a daily basis in SA, and the currency's devalued over time, and I think the projection for the future is more of the same. So I think it does make sense to have some money invested offshore, yeah, as a round hedge. Having said that, I think there's good opportunity to invest locally as well, and often at a much higher return than you're going to get in the European market. So I think it's good to have a view of both.
With having said that, I think South African investments do give arguably higher returns. What's your favourite investment arena?
I've got to say property, because it's done well for me over time. I've been invested in lots of the more traditional investments, be it stocks, bonds, managed funds, ETFs, etc. And some have done well, and some have been very disappointing.
Sure.
But residential property has been a good go-to for me. And what I love about property, and especially residential property, is the opportunity. Firstly, it's tangible. You can physically see the product. Secondly, there's the opportunity for good capital growth and for passive income. And I think thirdly, and possibly most importantly at the moment, even in a market downturn, there's still a demand for it, because people will always need somewhere to live. So residential property for me has been really good for me.
Safe as houses?
Safe as houses, Nick.
Spot on. Do you tend to do quite a lot of research before you invest? What information sources do you look at, and do those guide your investment philosophy at all?
Yeah, I think research is critical, to be honest. I like to do what I call boots on the ground research. So to get out and meet the people face to face, understand more about the projects. Obviously, in your case, you can see the properties going up. It's right. Tangible. There's evidence of it, and it's good to talk to current and previous investors as well, and get a real understanding of the project and its potential for success.
Is there something you look for in an investment company or investment type before you invest?
Yeah, I think track record is very important. What's this company been doing over time? Have they delivered the returns that they say they can? And the experience of the management team equally. It's very risky to put your money in something where the guys are doing it for the first time. It's an inexperienced team, yep, with no track record. So yeah, I think track record and experience very important. Okay,
so bearing in mind that sort of framework of decision making, what made you gravitate towards us?
It's a good question. I think the key thing for me, when we met, you'd already been in business a few years and you had a track record. You'd already delivered several successful projects with consistently, yep, high returns, and that gave me a lot of confidence. And when you look at the projects that you had exited, the returns were there, the proof was there, so it made it quite risk-free. You had done what you said you could do, right. You had evidence of it, and obviously you gained the experience and the track record, so that gave me a lot of confidence.
Some investors are just naturally successful. Doesn't matter what they put their mind to, they tend to do well out of investment. Is there a trick to investing?
I think luck and timing can also play a role. But I do think doing your homework and understanding and managing the risk is very important. Understanding what you're getting involved, having a calculated view of the risk involved, and equally I think having an exit strategy is important as well. And again, what appealed to me about your offering is that you had all of that right. catered for. The risk was underwritten by property, it's secured in the trust, there was a predefined exit period, so it made it very attractive.
Yeah, so you looked at some distinctive component parts within that entire cycle that obviously gave you some comfort.
Yeah.
What about your friends and your mates and colleagues? What are they investing in at the moment? Do you talk about that?
Yeah, I think a lot of people have got property investments. You know, whether it's their own primary residence or buy-to-lets. Some guys have got involved in flips. Other people are more risk averse, so they tend to stick with the more traditional investments in the managed funds and stocks and bonds and so on. And I guess probably the more adventurous guys are dabbling in crypto at the moment, given how well it's doing.
Yeah.
But it's obviously very risky if you don't know what you're doing as well. You can lose your shirt quite quickly. So I think it's good to have a balanced view. If you can have some low risk investments, and maybe set aside some smaller portion of your money for higher risk investments, but where you can understand and manage that risk as well. I think it's important.
Do you like the fact that with our product we're getting these fixed returns per annum, or do you prefer the volatility where on the upside you can win big, but if it goes bad, then obviously you're going to lose something on the downside? What's your preference?
I love the predictability of the returns. I mean, especially if you take how volatile the world's been for the last few years, the fact that you can offer a predictable return is so attractive.
Right.
And again, with a predicted exit point as well. I think that's absolute gold at the moment. The fact that you're offering a low risk investment with a high return and a quantifiable defined exit is so rare. Most times when you find a high return, it comes with high risk, and you've managed to reduce that risk, which is very attractive.
So we speak about volatility. Some people are intent on saving themselves to wealth. Some people are more in tune with investments. Do you have any comments on the difference between saving and investing per se?
I guess with saving, I mean, your capital is generally guaranteed and you have easy access to it, but often your return is below inflation.
Right.
So it's not particularly attractive. But I do think it's important to have savings and investments. But I guess if you want to build real wealth, you need to focus on investing rather than saving. And investing obviously comes with risk, but also the potential for much higher return than your average savings accounts. So I think it's good to have some money set aside in savings for when you need access to your money, but you've got to have investments if you want to build wealth, but equally you've got to manage the risk.
Investments can be complicated. Some have a great deal of complexity to them, some are a bit more simple. Our investment, was it a complex investment, or did you find it quite an easy investment to understand how it manifested?
Yeah, definitely. I think you've simplified this product to the point where in my view, you've democratized property investing. You've made it very easy for the man on the street to get involved in a property type investment, relatively straightforward, low risk, and at an affordable entry point as well.
Right.
Versus trying to buy an investment buy-to-let property where you've got to pay all the fees, you've got to manage it, you've got to get an agent to manage it. Here you're investing in a property-related asset, but without the hassle. And you've simplified it. And I think the transparency also, one of the things I've enjoyed is there was a lot of communications, a lot of transparency in terms of the progress of the project and how the return on capital, etc. So I really enjoyed that, yeah.
Were you happy with your decision to invest with us and the performance of your investment?
Very much, yeah. And hence why I invested with you again. So I think it was very easy. And as I say, it's a hands-off investment. The fact that you guys understand the property market and have built a low-risk, high-return product with a guaranteed exit, to me it was almost a no-brainer in many ways. And as I said, we talked about track record. You've done it before, and you've consistently delivered. And through COVID, which I think is a massive feather in your caps when the world's been upside down. So yeah, I'd gladly do it again and again.
Dave, I don't know who could put it better than that. You're very eloquent for an Irishman.
Thanks.
Good seeing you. Thanks so much for your insights. Highly appreciate it.
It's good to see you again, mate.
You too. Cheers.